All right. Let me just check, do a quick double check here. Okay, looks like we're good. Um, I'm actually just going to share one thing. Noah, what's your tag again? Your Twitter tag? Oh, there it is. Okay, it popped up.
No, no worries.
Yeah, sorry about that. So Restream has me kind of doing these manual posts when we go live. Right. Cool. Cool, 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 cool. All right. Um, yeah, Noah, thanks for joining me today. I know. So initially, I think there was we put out like a tweet, and we were like, does anyone want to come on our show? And you just popped up. So I think someone recommended you, and so I'm glad that you kind of agreed to come on and talk to us. And for people who don't know who you are, maybe you could give us like a quick intro about kind of like what your background is, what you did while working at Kalshi, and maybe yeah, just a little bit about who you are.
Sure. Yeah. So, I know I used to work at Kalshi as the head of operations there for over 2 years. Before I worked at Kalshi, I traded a lot on prediction markets. They were super exciting to me. Um, they made a lot of sense, right? Like it was just the most intuitive way to speculate on events, and that made me really excited. Um, and I as I was trading, I realized that there were so many different things that I thought prediction markets still had to add to the world. And instead of trading on them, I thought working at an exchange would be really exciting. Met a lot of the different people that worked at Kalshi. Made this trade and wrote this article for Kalshi about how I was hedging my student loan forgiveness. So I had some student loans that could be forgiven. They were eligible. Biden had made a lot of these promises. Um, those decisions ended up going to the Supreme Court. Kalshi had a market on what the Supreme Court outcome would be. So, I bought a bunch of shares in my student loans not being forgiven, such that I was kind of perfectly hedged from any of my personal exposure. And that was like my huge light bulb moment where it went from like, here's a fun place where I speculate on things, trade on things, I'm trying to make money just like everyone else, to a place where like, hey, I just kind of bought insurance for myself. I protected myself from something that like I obviously have no influence over, right? We don't vote for Supreme Court judges. They're appointed by elected officials. There's like a lot of different things that we can debate are flawed or not flawed with how the decisions are made. But the basis of it is like it's something that was completely out of my control that had a pretty big impact on me, at least financially. Um, and that was really exciting for me because I was able to, like I said, hedge away that risk. After I had written an article for Kalshi about how I did that and whatnot, we kind of reached out, we got to talking a little bit more, and I started working there. Um, while I was there, I worked a lot on like creating markets, focusing a lot on like how to get markets out really fast within the realm of regulation. Spent some time working on liquidity, talking to different people that were trading in order to make sure that the trading experience was as optimal as possible. And then kind of pivoted into a role where I helped doing some of our integrations near the end of my career at Kalshi. So worked a lot on the integration with Robinhood, which ultimately I think brought prediction markets to significantly more people than originally would have been exposed to them. But now I'm getting ready to start trading again. I'm very excited to do that, and I've been spending a lot of time looking at the markets on Polymarket and Kalshi, which have all been very exciting, and I have a lot of ideas as to like where I might be able to find edge. I'm super excited about things. And yeah, the space, I'm just super happy to say it's been blowing up. It's getting the attention. It's finally getting the attention that it really deserves.
Yeah, yeah. I mean, it's been a long time. I think. Well, it feels like it's probably a lot longer for you. I mean, when did you get involved with Kalshi? Like, what was this? Timeline wise, what was the date that you kind of reached out, or they reached out to you?
Yeah, it would have been the summer of 2023 is when I really started getting involved in prediction markets. So, I've kind of been been in them since before the really big election. When I was trading on prediction markets, it was primarily like predict it, right? I was trading on a lot of these like localized elections. That was kind of the flagship place to do work, and or Polymarket and Kalshi even ended up existing. And then I, traded on the other platforms, the incumbents now that we think of, when they were offering a lot more normal contracts, as I would say. Like I was trading on inflation and what the Fed would do, and like for some of the exchanges that allowed politics was still trading on politics. Since then, obviously, and since I, started working on an exchange back in the summer of 2023, things have changed a lot. We trade on significantly more exciting things now. Culture is much more involved in the types of, trades that we make. Sports are obviously a huge part of the ecosystem. So, um, but I'm still really happy that politics has kind of still been this like central focus, at least for people who are very into prediction markets. I think it will always kind of be the North Star for the way that we think about them, just because, politics are just so important to everyone. It's super novel that like there's super really cool novel ways that you can find edge in prediction markets. And I think that's very unique to that specific category.
Yeah, and like it seems like so when you first joined Kalshi in 2023, it was a totally different company. I mean, I don't even think they had their eyes set on crypto back then. Now they're talking. Now they've partnered with Solana, they've partnered with Base, they've partnered with a bunch of different kind of blockchains. They're working. It seems like they're kind of going in the direction of being maybe more decentralized, but it's hard to know. But it was a totally different company back then. Like, did you ever expect that prediction that the company that you joined back then would kind of become the company it is right now, which is a lot larger? Same thing for Polymarket as well.
Yeah, I mean, to be honest, I kind of did expect this. I don't think I expected it to necessarily play out the way it did. Like I didn't know what would be the thing that made these companies big, but I always had this feeling that Kalshi and Polymarket or whoever ended up like maybe it wasn't necessarily, 2 or 3 years ago, I wasn't sure if it would end up being Kalshi or Polymarket or anyone else. But I had this pretty strong feeling that there will at least be some sort of prediction market exchange that becomes very popular. And hopefully it's one of the ones, that I'm working on, right? Um, and that was that was like a really big important part about that decision in my career. Like, hey, this is a really obvious thing. Lots of people, people trade stocks, people trade crypto, uh, people trade almost everything. But what's like the most intuitive thing to trade on an event? Like my friends are trading on crypto. They don't understand like why things move up and down, and I think a lot of us still don't know why things move up and down. It's pretty irrational. When it comes to price distortion barely exists. It's based on reality, and people understand reality better than they understand anything else, which I think made it super exciting for me. And I, I can't say like I'm too surprised. Like I guess maybe I'm a little bit surprised at how fast it has grown. The velocity has been very incredible, but I always had this viewpoint that like this asset class was going to be a very powerful thing, not only for retail investors but also institutions. And we've certainly seen this grow on the retail side. I think we're still waiting to like fully see some really strong institutional adoption, but I'm very excited for that.
So correct me if I'm wrong, but you mentioned this a little while ago. You mentioned that basically when you were at Kelshi, it seems like the North Star was elections and political markets. And I think, my assessment is, from what you've said, is that you had a hand in kind of helping that happen. And I think it's interesting that basically you were kind of like on the front lines of bringing these new kind of election markets to the U.S. in like a regulated way. So I think that's very interesting, and I'm curious about your experience with that. What were the biggest regulatory hurdles? Stuff like that. Like what was that like to kind of to try and spearhead that?
Yeah, so the first thing is like, I I was seeing like obviously I was on Predict It and Polymarket, two platforms that were already offering political contracts, and we all recognize like the power of these. And Polymarket was doing it at scale in an unregulated fashion. Predicted was doing it not at scale, but in a regulated fashion, right? Predicted had limits. Polymarket didn't have limits, but there were certain legal restrictions or jurisdictions that they weren't terms. I had this vision of like, and everyone at the Kalshi company had this vision of, hey, there needs to be someone who does it at scale and who does it so that the US can get like very strong exposure to this. A huge hurdle of this was just like the legal battles that Kalshi had to go through. Suing your own regulator is something that lots of different exchanges don't ever really want to do because having a good relationship with your regulator is very important. And when Kalshi decided to self-certify a contract on who would control, the Senate or the House, the CFTC had stayed that self-certification, which means, they gave it a certain period of time to review it because they weren't necessarily sure if it complied with their rules and regulations. After that certain amount of time had passed, like, so first of all, like, you can imagine how frustrated we feel, right? We have to wait now for the CFTC to make a determination on this. Our assumption is they're going to determine this violates their rules. But we have to wait before we can do any action because it's well within their right to stay us up. Once we waited for this self-certification to play out, and they ended up, doubling down and saying, "Yep, this is wrong. We're not allowing this." Kalshi had to make the really tough decision to sue the regulator. And I remember, sitting on different websites that track court filings and outcomes and waiting to see what was going to happen. Once we finally got the great news that we could move forward with it, we recognized like, hey, this is kind of a once in a lifetime opportunity for our business. This is like the dream market that makes sense for a lot of people. Are CPI markets important? Yes. Do, my neighbors down the hall care about CPI? Probably not. But political contracts are important to me, and my neighbors down the hall are certainly also very politically opinionated. And I think we all kind of recognize like this is something that, is going to be a really big deal for prediction markets. So when we ended up getting that really big win against the CFTC and the courts sided with us, reaffirming the fact that, hey, trading on politics and trading on the outcomes of elections is not gaming. This is serious economic activity. There's a lot of economic consequence. There's clearly some hedging utility. It became a very exciting and very real thing to us. We worked extremely hard. We pushed very hard to get these markets out as soon as possible. You may remember like Forecast X, which is owned by IBKR, actually also made some of these political contracts after we had won. And those were hosted on Robinhood, which was also an incredible thing. Like all of the Robinhood users were now being exposed to what prediction markets were. And we were able to, have some of our biggest days of user growth in the history. And that's again just because politics was something that people really cared about. It's always been that North Star or the first thing that when you look at people who are trading in prediction markets, especially people who have been trading in them for a long time, most people say, hey, how did you get started? How did you get into prediction markets? Most people are saying, oh, I started by trading the Biden-Trump election, or it's a lot of people that got really invested into it because of elections. It's always just been the main focus.
Yeah, yeah. I mean, that's that. Yeah, I mean, to be honest, that's how I jumped into it. I jumped into it first by trading. Actually, pretty recently, I traded the Mamdani election. That was kind of like my first entry into prediction markets, which wasn't even that long ago. I mean, but it was just to your point, it's just really simple and easy to understand, and it's a lot easier to do analysis on that than say like a meme coin, which is filled with insiders. Now we got insiders on prediction markets, and we can talk about that later. But like, I just think you're absolutely right. I mean, what do you think was the thing that made? Why do you think other exchanges have had a hard time winning this regulatory battle where Kelshi has succeeded, which seems like it seems like you guys just succeeded very, very fast. Um, so
Yeah,
oh yeah, go ahead.
no, I think it's a great question. I think one of the first things is like you when you start your exchange and you have to think about things, you have a lot of different opportunities to take shortcuts. And when you're taking a shortcut, you're inherently doing something that is like, you might be doing something that's like at worst illegal, at best, like makes your regulator slightly upset, right? And when we were working at Kalshi, our number one priority was always like, we need to do things the legal way and the right way. It was a very pro-regulation company. And the main reason why was like, right, first of all, we obviously want things right. But more selfishly, like we think that the right way to scale products like this is to do them in a regulated fashion, such that banks have the types of trust they have in Kalshi the same way they trust New York Stock Exchange. And I think that's a huge reason why like we focused very hard on it. So Kalshi's ability to navigate the regulatory space in a very efficient manner has actually been a result of, taking significantly more difficult paths when making decisions. There's certainly been lots of things that I'm sure the company want to do that they have decided against doing for many different reasons, mostly around, right, like, hey, we want to do this, but we can't or we shouldn't because we don't know how the regulator will react, or we think will react in a negative manner. Or maybe we've already consulted our regulator about this and they've indicated that this is something they're not necessarily enthusiastic about. All of the different exchanges that operate with the CFTC have close relationships with the regulator. The same way, again, the NASDAQ and NYSE have very great relationships with the SEC. I think that's very important to continue moving forward and operate in the alternative lane, which is like we want to go to market as fast as possible. We want to ship something as fast as possible. You kind of ignore some of those steps. You're maybe not going to, be in the good graces of your regulator or be able to get as strong information as to what is permissible and what isn't. Because this asset class is very new, it's emerging. Uh, it's not that like the rules aren't written well. It's just that laws are consistently up for interpretation, and we haven't had the chance to yet interpret these laws. So I think that's like a main thing of Kalshi is, Kalshi's kind of leading the pack in pushing the boundaries, figuring out what's allowed and what isn't. If something isn't allowed and Kalshi thinks it should be allowed, right? Letting this, hey, we will, stand up for what we believe in, but we also respect you as a regulator enough to do it do it in court, and also respect your authority and not do a lot of different things that we would have wanted to do, or maybe even feel like we should be. But you've given us good reason as to why. So it's been a huge, I think there's a huge emphasis on having a strong relationship with your regulator, just because like they're ultimately the agency that gives these exchanges the power that they, need to operate. Without the CFTC, none of this in the US would be possible.
Yeah, I mean, I think that's a great point. I mean, I think it kind of like I'm really interested in something you said earlier. Like you knew that elections was basically PMF. I mean, like people like to trade other markets, sure, but like that was the thing that was kind of like the golden goose. And I'm just wondering, like, what like did you find initially, and this kind of gets into scaling liquidity questions that I have because this is always an issue with prediction markets is doing this type of thing. But like, did you find that that users just showed up, or did you kind of have to figure out how to kind of you know coordinate in order to get like some serious liquidity to start showing up to Kalshi? And I know you did some partnerships too, so maybe we can tie it into that. But like, I'm curious about kind of like the building and scaling of a prediction market
Sure.
when it comes to this stuff.
Yeah, I mean, I think the thing to think about with building and scaling a prediction market is that there are like there are liquidity providers, there are market makers, and there are market takers. And in most cases, market makers only want to market make when there are lots of takers. And market takers are going to be more likely to trade when there are more market makers. So you're in this like chicken and egg problem, and it's a very hard problem to solve. In general, the best solution for this is to have market takers. Because if there are lots of market takers and there's a lot of interest on a market, liquidity providers will come. Because, right, they know that they have a money-making opportunity. They're going to be encountering the type of flow that they want to encounter. There's a lot of different ways. it's a lot harder to tell market makers or ask market makers, hey, can you provide a lot of liquidity for this market? We think that a lot of people will show up, right? Like no one wants to. This is like you don't want to, get a bunch of people over to a party, or you don't want to bring alcohol to a party that's empty, but you might be willing to bring it to a party that's full of people. And I think that's the same with liquidity and takers. With that being said, like one thing I want to talk, like compliment Polymarket on is the fact that they have figured out and they have properly executed a very good strategy on having, liquidity. And they've done a really great job of bootstrapping it by, providing a lot of different incentives to have volume and liquidity on their platform. Overwhelming majority of markets on Polymarket have zero fees. That's a really great reason to trade. And there are also really great reasons to market make on Polymarket. Most markets have rewards. I wrote maybe a week ago about the new rewards program that Polymarket has where people can actually contribute their own funds to the reward pool, which I think is a really interesting way to crowdfund and make the liquidity rewards a little bit more sustainable. But Polymarket has poured a lot of money, a lot of their own capital, and operated their exchange at a loss for the purposes of having very strong liquidity on their exchange, which is very commendable, right? Like they've created price discovery and they've paid for price discovery. And Kalshi has like certainly done and pulled similar levers, maybe not to the extent that Polymarket has, for reasons such as like maybe it's not as sustainable as it may seem, right? Because it's you're not generating revenue if you're not doing that. But that's kind of neither here nor there. Um, I think another thing for like a big part of liquidity for at Kalshi was Susquehanna or SIG relationship that was developed just over a year ago. Um, there are obviously a lot of different places and big institutions that like playing on trading on Kalshi. There have been reports of jump trading recently, talking with both Polymarket and Kalshi. So there's clearly a lot of interest, but officially on the books, right? Susquehanna has this relationship with Kalshi, and Kalshi has been able to properly incentivize market makers to provide liquidity on a platform. And I think that's like a really powerful thing when you get a serious backer or a market maker on the platform, you're able to have like a really cool liquidity effect. But again, more importantly, and the most important aspect of this is to have enough traders. Once you have a lot of traders on your platform, which Kalshi has and Polymarket has, the market makers will come. Like, it's very well worth me spending time on Polymarket and Kalshi right now, perfecting a market making strategy or putting up limit orders because I know that counterparties exist. I'd be a lot less likely to do this on an exchange where I don't expect to experience any flow.
Yeah, we're so I have I have a couple questions here. I think one of the questions I wanted to ask though was when you were kind of building those partnerships with Robinhood and Susquehanna and I think Webull too, right? Or no, am I wrong about that? Yeah. So when you were building those partnerships, what does it take to kind of come in there and just convince these guys? I mean, you already said like having a lot of traders on your platform, but is there anything else? They're all in traditional finance. You're basically trying to convince them that what might be construed as like a DraftKings type gambling markets are like no, 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 no. This is like an actual finance class. This is like a new asset class. And you were early enough where I think you could have had those conversations. So I'm wondering if what is the type of things that you have to do to convince these guys to come over beyond traders, if there's anything else.
Sure. Yeah. I mean, obviously, bigger institutions, TradFi platforms, requirements and expectations. If we think about places like Webull and Robinhood, they have liquidity expectations, right? Their users are used to trading extremely liquid markets. And when you introduce them to a market that, historically hasn't been as liquid, the prediction market asset class or the event contract asset class, having strong liquidity is very critical. So, like when you look at Webull or Robinhood or any of these other apps that Kalshi is integrated with, they may not list every market on Kalshi. And they're selectively deciding like, hey, this market has enough liquidity for us, or this one doesn't. And there are a multitude of reasons why you should reject or accept a market or a broker. But one of them, and a very critical one, would be liquidity. So having these relationships with very reputable market makers like SIG is really important because it gives Webull and Robinhood the confidence that, hey, this asset has the backing of a very strong, reliable market maker that has historically done very well and has a great track record of market making equities, bonds, options, crypto, et cetera. Right. So like we should expect that trend to continue. I think that gives them a lot of conviction. I think the other thing is just right, the convincing that like this isn't DraftKings to not get this misconstrued sports book is just the edge. The first thing that really helps a lot in this case is like, hey, these are federally regulated contracts. They're viewed as future. These are like the types of, that type of language initially, at least from completely puts them on the other side of the spectrum when you compare them to DraftKings, even though like the end user experience. Um, when you consider that, and then you also consider like some of the other events that are being listed, right? We're probably thinking or talking about sports right now, and those are the ones that we're thinking of similar. But the initial markets that places like Webull listed were what will the S&P 500 be today, or what will it be every hour? And those have extreme similarities and parallels to the equity options chain. And I think that makes the asset significantly more comfortable. So when you look at like the product offering, there's kind of a scope of like this is the closest to TradFi, which would be like daily, hourly equity contracts, and then the closest to like sports books, which would be like a combo of five different player propositions and the outcome of the game. But at the end of the day, these all fall under the same regulatory umbrella. They're all federally regulated financial products that that are backed by an institutional grade firm. And I think that's like a really critical point to make when talking to a lot of these different companies that maybe are a little bit hesitant to fully adopt the asset class as fast as some of these participants have so far.
Do you think it's unreasonable to expect that every single prediction market can, every single event can be provided with liquidity? Like, for instance, we're seeing, like these markets, like, and again, I don't know too much about it. I haven't looked into it too much, but like we're seeing more and more markets from Polymarket that are very, very like, it's like you need a lot of liquidity to facilitate those, right? And I'm just wondering, like, what your opinion is on that. Like, do you think we'll see, a truly like a market for everything one day, or do you think there are actual real constraints that we cannot get there? Kind of like a broad question, but curious on your opinion.
Sure. Yeah, I'd say like the only thing to really be thinking about is the determination constraint or how objectively we can determine an outcome occurred. One example I give to a lot of people is like I think a lot of people would have cared, or a lot of people had an opinion on like, will the Super Bowl halftime show with Bad Bunny be good? Right. But to determine that market, almost impossible. Like, is it actually good? This is like an opinion market. And I think like opinion markets are a very interesting concept, but from an objective point of view, we can't really determine if that was good. Can we determine what color his shoelaces were? Most definitely, right? Like this is an objective truth. And maybe people aren't actually that interested in it. But I do think that like we can keep pushing the boundaries of what can be offered in the market. And I think that there is almost no upward constraint of how far they can go. If you would have told me like 2 years ago that we would have, you know, I don't know, $40 million traded on the State of the Union and what Trump would say, and those markets would be liquid with 1 cent spreads and $10,000 on both sides, I would have thought that was crazy. But that's where we are right now. So I can only imagine in 2 years the types of liquidity that a lot of retail will be able to attract. The end constraint ends up just being like, at least for Kalshi and for Polymarket, we can remove like one is this a FTC regulated contract or not? But if we kind of remove that, the Polymarket and Kalshi have right now is like, can we objectively determine this market and its outcome? And are people actually interested in trading on it? Those are the only two things I think that actually prohibit us from doing things from a literal sense. There are obviously a lot of different other issues, like is this in good faith? Like we probably can have markets dying, or if they'll survive things, or maybe catastrophic events, right? Um, so there's a lot of philosophy there. But for the most part, if people care about something, they want to trade on it, and we can objectively determine if it's happened or not within reason, then I don't see any reason why there can't be liquidity there. The only is your interest. If everyone starts really, really caring about what color Bad Bunny shoes will be at the halftime show, um, and everyone wants to trade on it, people will market make. It's just kind of the nature of the asset.
Yeah, and you know what, like the more I think about it, the more I think these prediction markets are just going to follow like traditional market paths, right? Like traditional finance, the same path. I mean, like the liquidity will get better and better and better as the market grows, right? People will come up with more automated solutions to make markets. People will, so eventually you'll get. I mean, right now it is still pretty. At least I find it difficult to make markets on Polymarket. I mean, I think you brought up a good point. Like they're providing a lot of good incentives with, people can add liquidity, which is really cool. People can add rewards for a market, which is really cool. But there's still like some friction there. So I think just as these markets grow, they're just going to follow the same path as the stock market or or traditional equities. Um,
Yeah. And it's
yeah,
also really important that prediction markets continue on what can be a market. Like if every market on your platform is liquid, like if Polymarket starts saying we're only listing markets if we know they can be liquid, we're not going to fully get to the true potential of prediction. So if you see that Polymarket is listing a market and it's a liquid, one indication is like, yes, maybe they shouldn't have done this, right? Like maybe this is too far, maybe this is too niche, all these different things. Maybe it's too volatile or it's objective to determine and people aren't comfortable making it. There'd be a million reasons why people don't make it. But the secondary action should be like, hey, I'm glad that they're trying things and that they're willing to continue to push the boundaries and their risk profile on what is a viable market. Because if we don't continue to do this, then what we have right now is what we're going to have in 5 years. And I think we can have significantly more, which makes me really excited because it's pretty clear right now that both Polymarket and Kalshi are willing to list markets that may be initially illiquid, but in a few years are going to be some of the most popular markets. They're both willing to take these risks, and it's all to the benefit of the end consumer.
yeah, yeah. I mean, you don't know how many times I've looked at like either Kalshi or Polymarket and been like, I want to trade that market so bad because I see it pop up. We have a news feed on our platform that automatically like kind of algorithmically surfaces markets, and they're usually pretty low liquidity markets based on the headlines of the news. But like they're so cool. Like some of those markets are just so interesting, and like if we have more liquidity, it'd be like those would be the markets that I would want to trade because there's so many different angles you could take. Um, that it kind of leads me to my next question too, because I kind of want to get into your trading stuff. So again, you're not trading right now, but I'm curious, like just speaking generally, right? Being on the other side of a massive prediction market, do you find that this, you know, like, do you find that you're approaching it with a different perspective than maybe you approached it as, when you weren't, you know, working with these prediction markets?
Yeah, I mean, I think like the first thing is like I'm definitely looking at different categories. I think there's two things you can optimize for, and they're likely going to be, like you want to go after the markets you think are the least efficient, but those markets are also likely going to be the least liquid. So your ability to like trade large size is going to be very difficult. Lucky for me, I don't plan on trading a substantial amount of size. Like this isn't going to be great for me until hopefully later. I think you have the second end, which is like you want to trade on markets that have no liquidity constraints or very little liquidity constraints that you can trade very large size without slipping. The only downside to that is like the markets that have, very efficient and have tight spreads are going to be like sports, economics, and some of the main. And the problem with those is like they're probably very efficient already. Is there value to be extracted there? Absolutely. We won't pretend like every market is efficient. If we pretend like every prediction market is completely efficient, there's almost no reason to trade on them. But they're much more efficient than these liquid markets. There's kind of this problem of trying to find like this middle ground. Right now, I've noticed there's a lot of culture markets that have strong liquidity, people trade on, but do very inefficient. And I think in general, the markets that you can find that have less data are going to end up being better. Data-driven decisions are a lot more easy to make. Most people are going to end up having parity in the data they can obtain, with like economic markets very, very liquid and very efficient. If you're thinking about culture, how good a movie is and if it will win an Oscar is fairly data driven. There's a lot of vibes around that. There's a lot of consumer sentiment, how critics think. Those are the types of things that I want to really trade on because I think there's a huge opportunity in this category of vibes in trading. Obviously, you should use data to make decisions. My main thesis is that while you're using data, you're probably using the same data and will come to similar conclusions as counterparties. Will obviously vary, but for the most part, you're not going to find discrepancies in the market based on data. Where you find your edge is when you're able to make some of these vibes-based decisions. So culture, mention markets, um, some of the different political markets. I also think there are like lots of opportunities in sports as well. Uh, there are clearly people that consistently can beat some of the sports models. College basketball is one of the more volatile sports, which is about to pick up very soon with March Madness. These are all things I'm really excited to dig into.
Yeah, yeah, that's so interesting that you say that. I mean, like, I think so many people do focus on data, but vibes is really where I've actually made my biggest gains. And that's just like I remember this one instance where there was like this dark woke thing going on Twitter, and it was like they were doing memes of like dark Gavin Newsom or something like that. And then I immediately saw my Twitter feed was full of like dark woke, and then I'm like, okay, I got to go bet on Gavin Newsom being the president because there's going to be a small spike. He's getting a lot of traction. It was just totally, it's just totally like me just thinking, oh yeah, this seems something that will inflate his character. So I bet, it went up a bit, went back down, a couple percentage points, not too much, but if you go in there with size, it matters. So I think like, yeah, I think it's just really interesting that that vibe is kind of like the way you want to go, and I think you're right on that.
Yeah,
Um,
a great example of it, right? Like polls are only going to get you so far. Should you be using them? Absolutely. But at the end of the day, like you can find out a lot about how people feel about politicians just by scrolling Twitter. It's very fun.
yeah, so I have a couple of kind of fire shot questions for you. I don't want to keep you too long because we're almost
Sure.
already at 40 minutes. But what is the most mispriced market you've ever seen, if you can recall?
Oh, sure. I remember, well, I think when Trump had gone up to something like 70, I think he was in the 70s on Polymarket. This was right after uh this was right after Biden had dropped out of the election. Um, I would have gone short so hard. Um, I think like when it pertains to most elections, I would be very happy to buy anyone in the 30s and very happy to sell anyone in the 70s when we've selected the two candidates. And there was this thing in my head of like, okay, so Biden dropped out, Trump's odds went up. I'm not really sure that actually makes sense because I was very confident in Trump being able to beat Biden, as were a lot of traders. People were pointing out these weaknesses. The thesis was mostly that the Democrats will almost certainly replace Biden with a better candidate. Not because a lot of like better candidates existed or like there were great candidates that they could put forward. Clearly they made the wrong decision, but such that like Biden is such a bad candidate that you almost can't find a worse one. And again, this isn't like expressing my political opinions or anything. This is more so just the perspective of me as a trader, which was that like, yeah, this guy's not polling well. He's very poorly recognized and he's stuttering over his words. It's not going to end up working. And in that moment, I was seeing, Trump getting up into the 70s and was thinking, hey, like this is a really great opportunity to go short Trump. And would that have worked? And we can always say hindsight's 2020. I would have shorted Trump, and then when you know, when the Iowa poll came out showing, Harris winning in Iowa, I would have sold him and when it was closest to 50-50. But the strategy was, yeah, sell Trump at 70, rebuy, and get out of position at 60 because I think it's very unlikely that in the next, at least near-term elections, we're going to see a state where the odds of presidential candidates sway outside of the bounds of like 70-30. And when they do, it should be a clear signal that like there is probably too much conviction happening on one side or another, or people are over exaggerating the confidence they have in a political candidate.
Yeah, I completely agree. I think that. Yeah, yeah. Again, like it's amazing how you it cuts through politics, right? Like you can see, like when you're betting on something like this, when you're betting on like a candidate, like who's good and who's bad, it's not even a political question. You just know because again, like you're your money's at stake. Like if we see Trump, it'll be same thing, right? We'll look for how I mean his election kind of period is over, but it's the same sort of thing with like mention markets. Like what's he going to say? What's he going to do? And I think it just goes back to your your kind of vibe sentiment as well. Okay, my last question, just because you mentioned it before we kind of jumped into this interview. Um, there's a lot of stuff with insiders, right? With prediction markets, we talked about a little bit earlier on. Today we had like Axiom was exposed for insider trading. And again, it was a huge market, massive volatility, and it's kind of like insiders exposing insiders, right? Because it's Zach XBTC or BTC. I forget the actually it's Zach BTC, right? Oh, I think I lost you.
Oh,
I
shoot.
think
I'm sorry.
yeah. I think I lost your voice. Um, So yeah, so we got a lot of stuff with insiders, insiders exposing insiders. Who's in, maybe like, you know, is it a feature? Is it a bug? That's kind of what I wanted to kind of get your opinion on.
Yeah, honestly, I'm very happy that there are exchanges that exist that I mean, we can cut through it. Like Polymarket can't enforce, uh, can't enforce against insider trading, and because they're that way, they're very pro insider trading, or at least like they've said, like this is the feature, um, and people will get more accurate information faster, and this is true. And when you're trading on a Polymarket, as long as you know that your counterparty could be an insider, and you're assuming those risks, I think it's actually fine. It's actually kind of interesting, like people debate about like is it wrong to trade against an insider or like is it wrong to do that? If I think something's going to happen and I trade against an insider and the event has like already happened, they don't like actually influence the event. It's not actually so bad. Like I'm going to end up with zero if I'm wrong anyway, regardless of who my counterparty was. And then if you think about Kalshi, like they've taken a very strong stance against insider trading, mostly because right, they also have to, and they have the means to. Kalshi identifies all their users, they're federally regulated. There's a lot of reasons why they should prevent it. I think it's pretty important if you want to scale prediction markets that you prevent it. It would be very hard to convince a liquidity provider to provide liquidity for a market and telling them, like, hey, by the way, you need to provide liquidity at these sizes, but your counterparty could already know. We're just letting you know that. Like, that's not a market that a serious market maker would be in, right? That's not a viable business strategy. So I think allowing insider trading can certainly have damages to liquidity. It makes me a lot less confident sometimes putting up, like if I'm putting up large resting orders on Polymarket, it might make me nervous because I could get sniped by someone. But it makes me nervous no matter what, because then we have situations that are really cool, like the Times Person of the Year, where people are digging up WordPress files to leak the cover. And that also hurts liquidity because it makes market makers very nervous that, hey, like we don't know when the Times Person is actually going to be known. And we could, experience a lot of trading against us as a result of that. I think that's very fine for both exchanges. And that's ultimately like the risk that, you take when you're trading on these platforms. So yeah, for the most part, it's like I think there are times when it should exist and there are times when it shouldn't. And it's very important, I think, that Kalshi continues to take the issue very seriously. Like if you're going to tell people you don't have insider trading, you need to enforce it very seriously and take it very seriously. I know they published that they had, enforced against two people yesterday, I think. And on the contrary, it's very important that Polymarket makes it very clear that, hey, you could potentially be trading against an insider. Um, and that's also okay as long as it's something that's disclosed. Because at the end of the day, like if you want to make a decentralized product, you have to understand that that's just going to inherently be a risk of, the infrastructure that you're running on. And we can't hide from that.
Yeah, yeah. I mean, I was having a conversation about this today, and again, I can't believe I forgot this guy's name because it's Zach XBT. I'm gonna get like cream for that, but yeah, I just. But at the same time, like I was having a conversation about him today, and I just thought it was so interesting because again, it's like, man, it's like it's kind of like we're getting into this place where it's almost like insiders are like he knows what he's going to announce, right? It could have been him betting on the market, and there was some. I think there was a post today that talked about how there was like a $63,000 bet that it would be Axiom or something like that, which could have easily been Zach XBT. Honestly, it could have been the Axiom guys just trying to make like extra money. I mean, they do that anyway. I mean, they probably be fine
Yeah.
with that. I mean, so like, but I was like, we were saying that a good way to kind of maybe refer to this is like incentive markets, right? Like you're kind of aligning incentives to kind of yeah, it's hard for me to see like a direct positive, but but like one way you could think about it is like, okay, well maybe I could incentivize like who's going to get like which one of these people is going to get a job, right, at this company, and we could place bets on that, and we could incentivize the company to take those bets as like an insider or something like that. So there's that aspect to it. But then the other aspect is that it's just crazy that Polymarket was able to predict who Zach was going to basically out. And I think that that's like another really cool feature of the insider stuff. But anyway, that's my kind of a my opinion on it. But
Yeah, no, this market was very incredible. I saw how it would be really cool if the listed on it would take large no positions to show their conviction that like, hey, this isn't us. We run a above board organization. That would have been like a really cool way to show conviction because like Zach only exposed one of the people on those lists. I'm not saying that the others also have you committed some sort of fraud or insider trading, but like it would be really cool if the people like the other companies on that list took huge bets against themselves. Like, nope, wasn't us. Here's our proof. We're betting 1 million on it, just to make like the insult to injury that much worse if they're actually wrong. Um, but it is like, in my opinion, probably it's wrong, obviously, to defraud people and then bet on the fact that you defrauded people and make you as a
yeah,
result. If
yeah.
people have positions, that would be definitely wrong.
Well, cool, man. Well, I enjoyed having you on, Noah. I know that I think we're at 50 minutes, so I don't want to keep you too long. But
No, no, right.
yeah, yeah. Thanks for coming on, man. It was really great having you, and learned a lot.
Great. Yeah, I appreciate it chatting. Thanks for the help.
Cool, cool. See you later.